Welcome to Common Sense, where we aim to educate and empower Black entrepreneurs that are dedicated to the growth of their businesses and their personal finances. My name is Io Doe, and I will be your host again today. And today's topic will be the tax trifecta. We're going to be talking about business operations, we're going to be talking about business planning, and we will be talking about profits and how to handle it. I'm very excited to have Mark Steward in the studio today. Mark is a business consultant, fractional CFO, and a financial literacy advocate all over. Mark, thank you for coming in today.
Appreciate it.
So I gave you a quick bio, and in our conversations in the past, that short bio didn't do you justice. So I want to give you an opportunity to just tell us kind of what it is you do and how you provide value for your clients.
Yeah, sounds good. So the name of my company is the Legacy Optimizer. So what I do, as Ayo said, act as a fractional CFO, and we'll go a little bit in detail as we talk about the differences between a CFO, CPA, and a bookkeeper. But within my fractional CFO role, I pretty much act as a financial voice for small businesses. I help them with forecasting, business planning, as well as tax planning, cash flow modeling, and also helping them measure the success of their business through dashboards and KPIs.
So in that, I think that was a great explanation of kind of your business and what you do. I wanted to learn more. How did one like you get to that point, right? Yeah. Obviously, you don't just wake up and start being a fractional CPA. I can't even talk to that. One doesn't wake up in the middle of the night and just turn into a fractional CFO. How did you get to that point? What was kind of your story, your background?
Yes, I always had a love for numbers. Started my career off in investment banking in New York City, working for JP Morgan. Did that for about 2.5 years. Did the analyst role.
And that's like the no sleep lifestyle. Like you were
no sleep
in office 10, 11, 12 hours a day, weekends.
10, 12 hours was a normal day.
That's a good day.
18, 19 hours, all-nighters, sleeping at the desk.
And that's before they was working from home, right?
Exactly. Sometimes sleeping in the bathrooms to get naps. So definitely hardcore, but really set the foundation kind of for my finance career.
Yeah, for everybody kind of at home when it comes to wealth management, or when it comes to finance in general, that's one of those jobs everyone kind of seeks after college. Very competitive.
Correct.
You have to do super well in school, but at the same time, it's just only so many jobs, and the process is so grilling. And one of the reasons is obviously they pay very well, but I mean, they taking your life away for a couple of years.
That's true.
And that was your experience?
That was my experience for sure.
Okay.
Yeah.
I just want to make sure we painted that picture because they don't just let anybody do that.
That's true. It's very competitive. Definitely a dog-eat-dog world, but definitely good training grounds for like what I do now. So from there, I worked for an insurance company doing risk management back here in Texas, where I'm originally from. And then from there, I decided that I wanted to go pursue business school.
Okay.
So went off to upstate New York got my MBA from Cornell. Thought about I wanted to do investment management, come out of business school.
When you say investment management, do you mean like wealth management, or were you thinking
working for like Fidelity, company like that?
Okay, so on a bigger institutional scale.
Correct.
Okay.
Yeah. But wasn't passionate enough about the market, so decided to come back to corporate finance.
What's wrong with the markets, man?
At that time, I didn't want to look at it every day. Yeah. So decided to pivot, stay in corporate finance, and had offers coming out from healthcare, airline industry, and also CPG. Decided to go the CPG route. Went to Mars in their leadership program. So I was based out in Chicago. Focused on the Walmart business, so I would support a sales team from a finance perspective. It was okay. Didn't love it, but had a couple friends who were working for Pepsi at the time.
Okay.
So they said they're really great finance executives there. So decided to move there to Pepsi.
And it's still in Chicago at this
time, Chicago. Right? Okay. Yeah, still in Chicago. And then for personal reasons, mother had got sick with cancer. So I actually decided to relocate back here to Dallas. Okay. And ended up working for a company called Dean Foods.
Okay. And what you guys do there?
Dairy company. So it's a dairy company. So from there, I actually worked in a brand new role. So they created a new role to help them with some of their business. So I supported that from a finance perspective. Okay. I supported that role. So I really got to see the entire value chain for the company, as well as institute new processes, new procedures, new dashboards for our sales. I supported about 5 VPs of sales as well.
Okay. So when you say new business, are you creating like projection models, net present value models to see what the forecast of these new businesses they add. And basically, if a business, if Pepsi was going to add a business, that was basically you telling them whether it was a good or bad financial decision.
Yeah, some of that stuff, looking at ourselves, looking at different units and different brands that we have in there. So building like a brand scorecard.
Okay.
So we can see how our new innovation was doing, also our current brands were doing, as well as just looking at how SKUs were doing, units we're selling through at different sales throughout the year.
So you've kind of been bouncing around these different companies and learning a lot from inside, and
Correct.
It sounds like it's leading to what
it's
you
building
do. But
and building
I'll
and
let you finish because I don't think you weren't done there, right?
Yeah, no,
okay. I'm gonna let you finish. My bad.
You know, as I wrap up, I really just wanted to experience like what does it mean to really own the entire P&L of an entire company. So got the great opportunity. Nike had reached out and got opportunity to go down there and be one of their focus on the long range planning.
Okay.
So having exposure in to the entire P&L, so the $40 billion P&L I managed from a long range perspective. So I helped out with the annual operating plan process, as well as the 3-year strategic plan process as well too. So looking at our budget, Nike's budget for the entire year, working with all the geographies. So talking to China, you know, EMEA, all of our different geographies, APLA, and also our Converse division. And also looking at the impact of what foreign exchange is doing with the company as well too. So another intense role, similar to iBanking, because our group, you know, supported the CFO. So we were very busy all the time, but still had some fun too. And you know, getting the Jordans and things of that sort as well.
And the employee store, right?
Correct.
When I was playing, we had like a small Nike deal. So I remember we used to go out there, get a couple $100 a month to go splurge. So it's not that bad. They're gonna treat you like a slave, but you go out there and get some free shoes, right?
Once again, it's another great experience to add to kind of my toolkit.
All right.
I believe in, you know, exposure and getting a lot of exposure so you can, you know, be able to be nimble in a lot of different situations. So from there, I moved to LA. Okay. And as you can see, brother's been around all the whole country.
I see that. Like, dang, stay still, man.
Right. So ended up getting an opportunity with Disney.
Okay.
So working with, you know, one of the biggest brands in the world, doing, once again, corporate FP&A, so supporting the business from that arena. And from there, I said, man, work for all these big companies. I think it's time to really add more value. So I actually applied to a startup role. So it was a startup role, and I was going to come in and really build the FP&A practice for the startup.
Okay.
And it was a Black startup, Squire, so they help out with all the back-end operations for barbershops, help them manage better. So I was the FP&A support for the organization there. So really built the finance tools, budgeting, forecasting, board reporting as well.
Now, were you the CFO of this company,
I wasn't the CFO.
Did you report directly?
I reported to the CFO.
Okay, so you got to get that experience, the CFO experience, especially for a small startup.
Correct.
And how did that kind of help you get to this point? Because obviously you got the corporate experience, you know, kind of where the holes are, and learn how to deal with individuals and just what the overall service the market looks like, right?
Correct.
Then you got to actually be damn near next to the CFO. So now I'm assuming from that role, that's what kind of trajectories you into what you do now, right?
That's correct. Yeah. So from that role, going from corporate to a lot of different resources at your fingertips, now to a startup, very limited resources, and also folks that don't necessarily know about business per se as well. So similar to like similar to small businesses as well. Yeah.
Well, less systems but
systems.
All the stress, if not even more, right?
Correct. And having to wear a lot of hats as well. So yeah, from going from the startup, that led me to like really going to do my own thing. Tired of the politics,
right?
You know, and I wanted to get my value, and I also saw that within finance and what I do, if I offered that service to small businesses, that was a great value, and I would be fulfilled. And then it leads me to my name of my company, Legacy Optimizer. I would help small businesses generate legacy for their companies, whether that be giving their companies down to the kids, keeping it in future generations, or maybe even selling their business one day to create financial freedom for themselves.
So how did you step into that? So obviously you were in LA at this time with the startups. Came back to Dallas?
I came back to Dallas.
Okay.
I came back to Dallas for a short term because when I started at Disney, I didn't mention this, COVID happened.
Boom.
So I started December 2019.
Yeah.
Then COVID happens 4 months later. As I'm coming back from Florida, stuff gets shut down.
Yeah.
So I actually migrated back to Dallas during COVID. Like 4 or 5 months into COVID. And stayed work remotely for a while, and then once I left Disney and went to the startup, they were remote anyway.
Okay.
So stayed in Dallas, and then eventually actually moved up to Atlanta.
Okay.
And went to school in Atlanta. I didn't say that before, but went to Morehouse College for my undergrad degree. So working in Atlanta for a little bit. And most recently, I think about 6 months ago, decided to come back to Dallas.
Okay.
Yeah.
So hold on. So obviously during COVID, people were working from home. And one of the things I'm super excited about is that you are not only working with entrepreneurs and have a wealth of knowledge for them, but you are an entrepreneur yourself, correct?
Right.
So you were working kind of remotely. Now, was this one of those side hustles that you built while working remotely? Like, were you over here, making sure the mouse was getting touched every 10 minutes, but really you were over here building your empire? Or what did that transition look like?
Yeah, I did actually start the business while I was at the startup.
Okay.
So started tinkering, started networking, making business connections, as well as still like you said, moving the mouse here and there, so to speak.
So you knew.
I knew.
This wasn't like
it wasn't
like a quit one day and you started the next day. You were kind of building your own book of business, and then when that got too much to handle both, I'm assuming you just said, you know what, I'm going to put my time in.
Right.
Or did you wait for a layoff and get that 6-7 months?
No, I left my own recognizance. Yeah.
All right.
Yeah.
Okay, that's what's up, man. I love hearing the story, and I think you have again, I said it before, but you have an interesting perspective because a few of the other episodes we'll be talking about is side hustles, right?
Correct.
And obviously this business that you do full time now, it started as a side hustle. We're talking to entrepreneurs, you're an entrepreneur yourself, and we talk about people kind of transitioning from corporate, which you also did. So it's going to be exciting.
And I'll just mention that one thing too. If you're really passionate about your side hustle, go ahead and make it a business. Because when I was trying to struggle between still working, still getting that guaranteed money versus, still doing a side hustle on the side, I really couldn't delve into everything that I wanted to delve into as deep as I wanted to within my own thing. Right. So I had to just cut that full time off and go full throttle within my business. And
that's when you just saw everything take off.
Yeah.
I like that. And I think a lot of people need to hear that sometimes because,
don't get me wrong.
Corporate America, they call them the gold handcuffs for a reason, man. Yep. I mean, you don't even realize you're in jail sometimes when you actually are, but, obviously health benefits. Right. I mean, you get the check regardless. I mean, you've probably had weeks where all you did was move the mouse for, a couple of days straight and that check still comes in. As an entrepreneur, that's not the case. You don't move the mouse and get paid, right? So I appreciate that. I want to hear more about what you do, the Legacy Optimizer, correct? So I want to hear more about kind of what you do there, your process, what your clients look like. Just tell us more about kind of either the day-to-day or what value Mark Steward is adding to his clients there.
Yeah, so I'll say the value proposition that I add is that I'm someone who comes in from a background of a lot of different industries. So I could take on a lot of different industries in terms of clients as well and have a lot of different perspectives as well. So I'm just not a finance guy, a numbers guy. I manage that for companies in terms of their numbers, their data, how do they project their business out in future years. So not only short-term planning for next year, but maybe you want to look at your business in 3 to 5 years. So I help structure that. So I help build that, create it, and also help implement that. So I'm asking all the right questions. I'm giving you the advice in terms of like, okay, this is what you need to do within revenue, helping them build a sales plan. This is how many clients that you need to get to each month, each year, et cetera.
Okay, so not only is it kind of, you don't come in and tell people what they're already doing. You're telling people if this is your goal, this is kind of how to get there.
Correct. When we talk about planning, right? And then I also talk about what you're doing currently. What is the data? I help bring the data to life for companies.
Why do people need you? Like, why don't people just hire CFOs?
Yeah, they can't hire CFOs because a lot of small businesses can't afford CFOs, full-time CFOs. So in a fractional role, I'm able to come in at a very much cheaper rate than you would pay for somebody full-time, able to do the same things that they're able to do, but do it in a cheaper way. And also be with you in a more intimate setting as well.
I'm sure you get a lot of offers to be a full-time CFO once your clients get big enough, right? But that price tag has got to be up there for you now, huh?
Yeah, it's got to be up there.
Okay, so if I'm a business owner, what's the difference between a fractional CFO and hiring a CFO who's part of your business? Obviously, there's some give and take there, and I'm not trying to get you to talk yourself out of some future jobs, maybe. But I would like to know, and people kind of would like to know, what's the difference between having one in-house on salary full time and versus having somebody, for the most part, run your numbers for you and give their opinions when asked.
Yeah. I think for the fractional role, it's a little bit more part time. So I can work for your company, but also be able to be working for 4 or 5 other companies as well at the same time. When you have somebody in house, they're just truly focused on your business
Right.
every day,
Mhm.
every hour. So they're working for you. I'm also working for you as well too, but it's more on a limited. I say more on a part-time basis.
How are you able to? This is just me being nosy
Mhm.
now. How are you able to? Let's say I got 5 companies, and they all want to meet on the 1st of January.
Oh, yeah,
Or
yeah.
I mean, that's obviously an issue. Do you set time ahead and say like, look, you got the first week of the month if you need me to do stuff, or is it, hey, I will respond to your email, but you got to give me 48 hours because it
Mhm.
can't just be this. Like, how do you manage it? Because obviously, if you have an in-house
Mhm.
CEO and you need some, like,
Right.
show up because you ain't doing nothing else. We paying you to
Correct.
be here.
Yeah. So I work out. So some of my companies, clients, they're not just want the whole CFO suite.
Mhm.
So I'm just maybe doing one thing for them, such as projections.
Okay.
Like maybe they may need your projections out for 2024 or a 3-year projection, right? So they're looking to like raise money. So I'm helping them get their financial infrastructure correct, so they can raise money, and whether that be investors or going to a bank for loans. So helping out with that structure, that could be one thing. Another thing could also be that I'm actually helping them out with their cash flow.
Mhm.
So helping them manage their cash flow for forecasting
Mhm.
as well. It also could be helping them with their taxes. So doing like tax planning for them as well.
And we'll come back to the cash flow
Yeah.
conversation because I know we got a lot to talk about
Mhm.
there. The differences between cash flow and actual, money,
Right.
business being booked.
Correct.
Let me ask you this. When it comes to taxes in general, because again, we talk to entrepreneurs, and a lot of
Mhm.
entrepreneurs, especially in our culture, are folks that come from the working world, clocking in, clocking out,
Mhm.
safety of corporate America,
Right.
to going out into the wild, wild west of the
Mhm.
business world by themselves. What are a few things, just like tax wise, that you feel like folks need to know? And then I'm going to follow up, just so you don't, give all the good stuff first. I'm going to follow up with what are some mistakes you see entrepreneurs making tax wise,
Okay.
just on a tax basis, or filing taxes or doing their taxes.
Yeah, I think first is like understanding what you want your business structure to be.
Okay.
So obviously, I think most folks have heard of LLC, sole proprietorship, as well as S corp.
Mhm.
Those are probably the most familiar. Also, you have C corp as well.
Mhm.
But I'll keep it to those 3 for today's
Okay.
discussion. So when you look at a sole proprietorship, that is someone who you will still you own the business, right?
Mhm.
But you also own you're personally liable for any debts on the business as
So
well.
explain liability real quick.
Yeah. So you have say for instance you have a loan for $10,000.
Okay.
When you have a sole proprietorship, you're responsible for that. So not just your business. So if your business fails or goes under in terms of that, you are personally responsible for that $10,000.
So if I'm the bank, I can come for your car, your house,
Correct.
your children.
Yep.
Obviously not the children,
Right.
but you get what I'm saying. Like
Yeah,
I can
yeah.
come for anything.
Correct.
So there's nothing stop there. Why would somebody want to do? Because to me, right now, that sounds scary, right?
Mhm.
Why would I do a sole proprietorship if if I'm potentially at risk at losing my life outside of this business?
Right. It could be cheaper.
Okay.
Less paperwork and things of that sort. So I think that's why a lot of people do it.
Okay.
And it's like what people kind of know. But transitioning over to an LLC,
Mhm.
that gives you limited liability. So now you have limited liability on business debts and business things.
Okay.
Yeah.
So my question to you is, as a sole proprietor,
Mhm.
it might be cheaper. At what point does it kind of make sense to switch to an LLC, which you'll probably explain here in a second?
Yeah,
what that is.
once you believe that you have a viable business,
Mhm.
it's not just a side hustle, but you really want to focus on this. It's not, and it's also you have a viable product
Okay.
and it's selling, and you have some clientele. I would say go ahead and make that LLC.
So like if I'm doing hair
Yeah.
and nails, maybe a couple thousand a month, I should
Yeah.
probably keep that as sole proprietorship still.
Yeah, I'll probably keep it sole
Okay.
proprietorship,
And that's
if it's
low
a-
risk too, unless you like burn
Correct.
somebody's hair off,
Yeah,
right? But like
right,
for
yeah.
the most part, ain't nobody really gonna come for. Okay.
Right.
Now, I guess my question is, at what point
Mhm.
does IO's hair shop turn into a business that needs to be an LLC? Maybe is it an income thing? Is it a revenue thing? Is it a inventory thing?
I would say it's an income thing.
Okay.
Certain level, and people have different thoughts about it. But I say once you start making, I don't know, even five or 10 grand, I think you should go
A
ahead and
month
get
or
an
a year?
LLC, for a month.
Okay.
Yeah. I think you start going even a few thousand, but if you're going to be focusing on this,
Mm,
just go ahead and make an LLC.
okay.
It's not that much money
Mhm.
to help take away some of the risks of your business.
Okay.
Yeah.
Well, tell me more about LLC now. We talked
Yeah.
about sole proprietorship. Well, Explain the LLC, because if you on social media, if you on Twitter, Instagram, whatever it is, you're gonna see a lot of folks talking about, open the LLC and I'm gonna pay my kids, and then my kids ain't never gonna have to ever pay taxes. Like, whoa, time out. Don't you need a business? Like, why are people just opening up LLCs? So explain what that is and how those work.
The LLC is probably the basic one that most people have.
Mm-hmm.
So I think it's the safest. I think on average, that's the one you should go with. And when you think about when you make a certain point within your business, say for instance, 50 to 60K, 50 to 100K, that's when you should start really thinking about S election. So S Corp is still an LLC.
Right. Okay.
You just do an election for S Corp.
Okay.
Right.
So
within when you transition over to an S Corp, that is reason because you want to limit your tax liability.
Okay.
Yeah.
An LLC is not limiting your tax liability, or just not as much as an S Corp?
Yeah, not as much as the S Corp, right? So you can still include that within your personal, your personal. But when you have an LLC, let me see, break this down in perspective.
Take your time, man.
Man.
Go ahead, take a sip.
Okay, yeah. So when you have an LLC, it's a bit limited liability, but you're still responsible for your self-employment taxes.
Okay.
So when you think about when you have your own business, you're still responsible for federal and also self-employment taxes. Yeah. That used to be taken care of by your company. Right. Now you're responsible for that. And that's a lot of times what some business owners forget. Responsible for both.
And I know you located in Texas, but state taxes as well too.
Correct. Yeah, state taxes as well.
Because I know y'all got the got the ability now to pay those. We got to pay these up north.
Right.
But all right, cool.
So that's the reason why people want to get over to S Corp, S election, because now you can eliminate self-employment taxes. Okay. Right. So now you pay yourself a reasonable, thoughtful salary, and you pay taxes on that, and then the rest you can have in distributions to yourself.
So you can pay yourself. So you can, excuse me. You can pay yourself, like you can, again, my company, let's say, generates $500,000. I don't have to pay myself $500,000 as an LLC. I can pay myself a certain amount.
Well, that's an S Corp.
As an S Corp, but not an LLC.
Yeah.
So LLC is closer to a sole proprietorship where if my company makes the money, I just made the money? Okay.
Yeah. What the LLC does is it gives you limited liability.
So it just gets rid of the liability, but it still works like a sole proprietorship. Well, Now, what if I have individuals as partners, right? What if I'm coming in 2, 3, 4 people?
Yeah.
So let's say if it's 4 people and it's 25% ownership, is that 25% liability as well as 25% tax liability?
Yeah. So that's 25% for you from the business in terms of what that business does. So if it generates, say, $100,000 profit, you get 25 of that, right? Okay.
So what you talking, I mean, obviously at first, limited liability sounded better than
limited liability, yeah, for sure. LLC.
Limited liability corporation, LLC sounded better than a sole proprietorship. Yeah. But now you get going, I'm like, damn, well, S Corp seemed like the move. Yeah. Why would somebody go with LLC over an S Corp?
When you move to an S Corp election, there's more paperwork.
Okay.
So you have
a lot more paperwork?
Not a lot more, but it's material. Okay. Right. And you also have to do like different send IRS different paperwork as well throughout the year. So that's one reason why. Yeah.
So for the most part, like a side hustle should probably say an LLC, because it sounds like
depending on how much that side hustle is bringing in.
Yeah, how much. Okay. Yeah. Because I know for some folks, and this is people of color, this is white folks, this is Mexican, this is everybody, right? I feel like some businesses when they're starting out, the bookkeeping isn't strong. You know what I mean? And it sounds like you don't want to be in a situation as an S Corp with bad bookkeeping. Correct. Because then you really exposing yourself to the I, the R, and the S, right? Correct. Yeah. Okay. So
I know you want to switch gears, but I think that's a good segue. Okay. So what do business owners do wrong? Yeah. With coming in with taxes? That's one of the things that I recommend. Is making sure that you have organization. Right. So making sure that you know where your paperwork is. You also understand what paperwork you have to give out through the year. So for one example of that, here in Texas, we have to pay franchise tax. Okay. And normally if you don't make over a certain amount, well, I think it's like almost a little over $1 million. Yeah. You don't have to pay.
Well, I want to pause you real quick, because when I think franchise tax, I think like how I own a McDonald's. And since I'm a franchisee, I'm getting taxed by McDonald's franchise tax. That's probably not what it is, right?
No.
What is a franchise tax? And you said
It's
that
more
happens-
focused in certain states.
Okay.
But it's kind of like a tax for kind of state income,
Okay.
so to speak. So every state doesn't have it.
Okay.
But Texas, for an example, is one of those states.
Okay.
So which I think is due in May every year. But you have to make sure as you're once again going back to planning, as you're planning out your year, have that in your calendar.
Yeah.
You know, set that alert early on so that you know. Because I don't think your tax person may not give you that notice, right?
Yeah.
But you want to make sure that you're responsible for your business.
Because when you're a W-2 employee working for a company, you don't have to focus on taxes until, you know, them W-2s come.
Correct.
And, you know what I mean? Do that, boom, pay what you need to pay or get what you need to get back, you move on.
Correct.
But as a business owner, it sounds like before you even make a dollar, you need to understand how much money's coming in, how much money's coming out, how much money will be paid in taxes, expenses, X, Y, Z.
Yeah, and also now you have what they call estimated taxes as well, which you have to pay on a quarterly basis.
Okay. You have to pay?
Yeah.
Or you should pay?
You should. You should be paying because you could actually, if you're not paying those throughout the year, there could be penalties and fines.
Oh, okay.
If it comes up and you know when you file your taxes in April, if it's not correct, you haven't been paying. You could have a fine because you should have been paying at those different intervals throughout the year.
So, what size should you, or not should you, do you have to pay estimated taxes?
What's the question?
What size of your company or business revenue being generated does that apply to you? It doesn't matter.
Yeah, it doesn't
so
matter.
again, when my hair shop,
Yeah.
when I got one wig coming off the shelf with Io's hair shop, I still need to pay quarterly taxes.
Correct.
And is that in every state or is that in just some states?
That's everything.
Okay.
That's every state. Yeah.
Okay.
And one thing about that kind of goes back to planning once again. If you plan out your business for the year, so based on the different assumptions, maybe you have historical or you're a brand new business. Say, for instance, you project out after you've done that work, $100,000 I'm going to make in this year. You have your deduction expenses, so maybe you're netting $50,000, right? And that's what your taxable income is.
Okay.
So now you split that payment up, what you owe in taxes off that $50K, you split that up in four payments.
Okay.
So now you have a good understanding of what your liability and payments would be throughout the year.
Because the thought is once you go into business for yourself, refunds are done with. But it sounds like that's not true. That's a myth, right? Technically, you could overpay in estimated taxes and get a tax refund as a business owner.
Correct.
So I feel like kind of the thought is people are like, well, if I move, you know, that nice couple thousand I was getting, that's gone. But now you can get those.
You can.
If you overpay, that is.
Correct.
Now, you talked about, you know, kind of projecting out your incomes for the year. What if you're a first-year business owner? Are you still paying estimated taxes based off not making any money last year? Or is that something that comes within a couple of years of starting your own business?
Yeah. I mean, if you're not making any money, you know, you don't have anything to pay, right?
Right.
So you don't have to pay anything.
Well, you didn't make money last year, but let's say I'm about to make it this year, right? Because we talk about planning. We're forward planning. We're intentional with it. How do you make an estimation when this is my first year in business?
That's where I come in. That's one of the things I help companies do. So I help you project out working with you on a sales plan. What's your sales plan for the year? How many clients you want to serve? What's your pricing architecture? Also, what expenses that you have for the year. You have employees. That's another thing we could talk about. You have employees. You have software subscriptions. So we lay all that out. I ask you the necessary questions to be able to lay all that out. So now you have a plan for 2024. So now you have an idea. Is it 100%? No, it's not 100%. But you have probably 80%, 90% accuracy of what your year will look like. And then I'll work with you throughout the year to be able to say, okay, something's changed. I got a spike in my business. So now I think I'm going to make $200,000 versus $100,000. Okay, that may put you into a different income bracket. So that's gonna change your tax rate, right? So thinking about that, what does that mean? Okay, do we need to take some more deductions this year, buying equipment to lower your tax liability for the year? And
tax rates go for businesses too, not just personal.
Sorry?
So tax rates, tax brackets, those go for businesses as well.
Oh yeah.
Not just personal.
Correct.
Okay.
Yeah, that's what you pay your federal off.
Okay.
Of. Yeah.
So I got one for you. Well, first of all, I want to make a comment. It sounds like the minute somebody steps into your office and becomes a client of yours, they're thinking about things they never would have thought of before. They automatically become, I would say, more versed and more prepared because you're making them, you know, talk about what they're about to buy this year, when they're about to buy it. You talk about how much they're going to pay in taxes, how much they're going to pay their employees, how much they think business is coming in, how much they need to start sending, you know, allocating towards the sales team, business development, X, Y, Z. So not only are you kind of making sure people stay out of jail, you're also making business owners and CEOs become more prepared to essentially grow their businesses. And is
That's
that,
correct.
do you get a lot of feedback there? Because obviously,
Yeah.
I don't know if you actually put that in your tagline because it's not what you do directly, but I'm sure, after a couple of years work with you, people are like, man, thanks so much, Mark. Like, I wouldn't even have thought of this. We grew twice as much just because you asked questions I never thought of.
Yeah, I know we're talking business, but that's what I do in personal life as
Right.
well too. So helping people think differently of what they maybe never thought about before. Because once again, this has been a thoughtful person, curious, but also this is my background and being able to see a lot of different things in so many different companies, right?
So I want to switch gears again.
Mm-hmm.
You talked about this earlier, kind of in your intro,
Mm-hmm.
and this is a big one I think folks need to understand. Quite frankly, even in my profession, sometimes I confuse these different titles, if you will.
Right.
So you said bookkeeper, CFO, and CPA.
Yeah.
All three roles in finance, all three important roles of a company,
Yeah.
not necessarily the same person and definitely not the same thing.
Correct.
So I would like you go ahead and explain to us what the difference is between the three. Who needs them, who doesn't need them, or when do people use them? And then it sounds like you do all three, correct?
Yeah.
Okay.
So a common theme that I always hear from the community, I need a CPA, I need a bookkeeper.
I said that to you.
Right.
I was like, so you a CPA? You're like, not just that. I'm like, okay.
That's what I think is what everybody's been exposed to, right?
Yeah.
So that's the only thing they've been exposed to. So when you think about a bookkeeper, so say for instance, I think everybody's familiar with QuickBooks, right? So a bookkeeper will help you manage your transactions of your business. So if you have a QuickBooks, they're going to maintain, making sure that you bought, let's say, marketing software that goes in the GL account for software, et cetera, et cetera. Your revenue goes with revenue, your expenses goes in expenses, and get you to your net income. So that's what bookkeeper does.
Okay.
They essentially really just manage your transactions for your business.
So would you say that's data entry, right?
Correct, data entry. And you don't have to have a CPA to do that.
Because I know some businesses, they might hire like a college kid home for the summer, like, hey, can you do my last 3 months for me? Or might hire their son or daughter, or even themselves if they're not versed to finances as well. It seems like it's more of a simplistic process, just kind of wash, rinse, repeat once you understand what you're doing.
Yeah. I mean, business owners can actually do it themselves at a certain point once they get the knowledge.
Right.
But even like I did bookkeeping for a charter school when I was in undergrad.
Okay.
So once again, it's managing QuickBooks, making sure that just coming from an accounting background, I knew where things went in different GL accounts, right? Okay. So that's a bookkeeper, short and sweet.
So I'll pause you because I want to ask some questions about bookkeeping. What's good for bookkeeping? What's bad bookkeeping? What's good strategies for bookkeeping? Because again, I've seen businesses that might do bookkeeping twice a year and they just try to go 6 months back. I see people that do it at the end of the week, right? But end of the week, you might be paying somebody way too much to do something that they can maybe wait till the end of the month. So like, what's a good kind of strategy for a small business owner getting ready to start their own bookkeeping?
Yeah, I would definitely say on a monthly cadence,
okay,
which would be pretty good if you have, for most businesses, I think a month cadence will work. Your bookkeeper should be, giving you a report of your, your income statement, your balance sheet, and your cash flow on a monthly cadence.
Okay.
Yeah.
Perfect. So I'll let you keep going. I just want to make sure we understood bookkeeping and what good practice is for that.
Yeah, definitely. So moving into a CPA. So love my CPAs. I almost went CPA route as well. But CPA, obviously, they're certified public accountants. So they went to school, took the 150 hours, got their certification, took the test as well. So they know a lot more about regulations. So I would say they'll help out more so with regulations. As your business gets more complicated, they can help out more, right? They can also do the bookkeeping as well too. So they're versed in that. But they're a little bit more high level for your business.
Now, do CPAs, is there different types? Do CPAs have different disciplines and practices? Like,
they
obviously,
do.
I have a CPA for my personal business and myself, right? Are there some CPAs that just work with personal people? Are there some CPAs that work with expats? Are there some CPA? Is there something we have to look at when looking for a CPA?
Yeah, I mean, you can get specific CPAs. You have CPAs who just work on do auditing. Okay. Right? You have some CPAs that are just focused just on pretty much tax. Okay. So you do have specifications on CPAs, but the broader level, just a regular, CPA, they're pretty much just working with businesses.
Explain why somebody would need auditing for a small business. And could that same person do taxes?
Yeah, if they get to a certain level.
Okay.
So say if you get to your small business is now making, which $5 million, $3, $4 million, $5 million.
Which is crazy that they're still considered a small business.
And you're thinking about maybe getting acquired
Yeah.
things of that sort. Or you maybe have a startup and then you want to go public.
Mm.
Then you're gonna need to audit the financials,
Right.
Somebody to audit those financials,
Okay.
and a firm to do that.
Okay.
Yeah.
So would that audit person internally also file the business taxes, or is that a different person?
That'd be the same person.
Okay.
Mhm.
All right. So we got the CPA,
Yeah.
the bookkeeper. Now you're going to go ahead.
Then we got
with
the CFO,
the big dog.
Yeah,
the
big dog.
HNIC, the CFO.
The strategic thinker of the bunch. So CFO, they're able to, like, for instance, I've worked hand in hand with accountants
Mhm.
and bookkeepers before.
Right.
So I help them with what they call monthly close. So actually closing the books for the prior month, looking at those and using the books that we close and CFO will be able to project that out.
Yeah.
So once again, a CPA or bookkeeper, they'll tell you what just happened in your business. So we're in January. So in February, they'll tell you, hey, this is what you did in January.
Boom. That's it.
That's it. So they tell you the what.
Okay.
CFO is going to tell you the why, the how, and then what does this mean for you in the future?
Okay.
What does it mean for you the rest of the year and possibly next year?
So telling time versus learning how the clock works, right?
Right.
Okay.
Yeah.
So CFO is going to be more visionary, but obviously needs a bookkeeper on his team, I would take it, to kind of help make those projections.
Possibly.
And then leadership as well as giving advice. Like if I'm a CEO and I've hired you as a CFO or a fractional CFO,
I'm pretty much your right-hand man.
You're sitting in my meetings and I say, hey, we want to do this year. And you're like, I don't know if that makes sense. Maybe we do this.
Yeah.
Or, hey, you think it's too small because by third quarter, we'll already do that. So let's think bigger.
So if you think about a CFO, they're not just doing the data, but they're also your strategic thinker as well.
Okay.
And the role has become a lot more strategic over the years. Because like I said, working with the CEO and the owner on kind of like that next to next, basis, right?
Okay.
So think about the business holistically, but also strategically in terms of what does this mean for Q3? What does it mean for Q4?
And in your business, you do all three of those.
Correct.
Is it just you, or do you have a team of people?
I have a team of contractors that I work with if I can't handle certain business.
Now, as a business owner, if I'm being approached as somebody like you, well, first of all, if I get approached by you, that's awesome that you do all three. But A, how do I figure out what I need? And B, how do I understand? How do I ask those questions like what you do? Because I don't want to come in here thinking I'm getting a fractional CFO and somebody's just keeping the books for me, and I find that out later.
Right.
Or vice versa. I don't want to look for somebody to keep my books, but all of a sudden I got you stepping in my office and it's like I didn't need all that yet, right?
Mm-hmm. So I think some of the questions you ask yourself is like, what is my budget? What stage am I at in my business? Am I just starting out where I'm just looking for somebody just to organize my transactions for me, and that's it? Or do I want somebody to not only organize my numbers and my data, but also help me measure my success? What does that mean? What are some of the KPIs and key metrics that are transforming my business? Also, what should I be thinking about in terms of scaling my business? Do I need to hire a person? Do I need to hire a full-time person? Or do I need to hire a contractor? Those are two very different things. If you hire somebody full-time, you now have to take on paying that person benefits.
Right.
Versus a contractor, you don't, right?
So you got to think about, A, do you have enough work for this person to be on full-time?
Yeah.
Now,
and also the budget as well, too.
Right. And I'm guessing you're your own CFO at this point, but as your business gets bigger, you will probably hire somebody to do that, correct?
Probably not.
Okay. He said, I'm kidding. I'm doing my damn self. All right.
No. No, it's getting a little bit out of the subject, but I think too, as companies are looking to scale, you may be thinking about acquisition.
Right.
So maybe acquiring another small business to help you with some of your other areas, right? So
now,
say for instance, I want to continue to focus on mainly CFO services. That's my passion.
Right.
And the bookkeeping is okay, but I'd rather be able to get that off to someone else. Hey, why don't I think about acquiring another small business that focuses on that and gives me the latitude to focus on the CFO service, right, and build that book of business.
Give me an example.
And that's what I do for companies. So instead of I hate numbers. Give that to me. Allow you to do what you love, whether that be marketing, whether that be going out and selling. Allow me to take over that for you.
And you'll essentially charge based off of whatever service you're providing.
Correct. Yeah. But I only take that off for you and execute on it, but I also teach you along the way. So you're learning, you're being more self-sufficient down the road.
Okay. I'm going to switch gears a little bit. Let's talk taxes. My question to you about taxes is, and we talked about this before. I want to be careful how I say this because we don't promote people evading their taxes and not paying them, right? But what is the best? I'm gonna ask this way: what's the best way to optimize your tax man? I think you know what I'm asking because we talked about it before. So I want you to go best way to optimize my taxes as a business owner. Because again, this podcast is going to be more directed towards people who have kind of jumped the line from the corporate life to managing their own businesses. Not a whole lot you can do as a corporate employee to decrease your taxes. Maybe contribute to a 401k if you're above the standard deduction, but God forbid you're married and that standard deduction now it's like $30K. Unless you're giving away that much money, you're pretty much stuck with what you got, right? As a business owner, there's plenty of ways where you can decrease, increase. I don't want to say manipulate, but you can make that number look different on April 15th.
Yeah. One thing to do is think about your retirement.
Okay.
So you may have paid your retirement 401k when you're in corporate, but once you're a business owner, you can still do that as well. So that could be one way for you to lower your taxable liability, but also still be saving for your future along the way as well.
So saving to a retirement vehicle. So which one's particular? Because obviously you don't have exposure to a group 401k plan anymore as a business owner, unless you start one yourself.
Correct.
But what are some other vehicles that you feel like folks?
There's a simple as well.
Simple IRA?
Correct.
Okay.
Yeah, you have that. Couple of the options that you have. But I would just see what's best for you and see what your plans are. And that's one tool that you can actually use even after the year is over.
Right. So
say for instance, I need to move around 3 or 4 more K. Look at your IRA, look at your 401k. And I think the overall maximum number is like 6,000.
Right.
So be able to make sure that you fully utilize that as an option to decrease your tax liability.
And the thought process with that is whatever you put into a simple SEP, even a traditional IRA, right? Whatever you're putting into an IRA, you're not paying taxes on that this year. You're essentially deferring your taxes.
Correct.
Because at some point when you do need that money, I mean, the government's not that nice. They're gonna tax you at some point, right? So the thought process is, hey, maybe this is a big tax year. I would like to lower it by deferring taxes for later.
Right.
But then, when I'm 59 and a half or 70 or whenever the money decides to leave the vehicle, I'll then pay taxes then.
Right.
Okay.
Yeah.
So how about some other ways? Obviously, saving for retirement is one. What else?
Saving for retirement is one. Looking at all the deductions that you might qualify for.
What's a deduction exactly?
Yeah.
What is that? My bad.
Yeah, so deduction would be like, I want to deduct, for instance, I'll give you an example, car expenses.
Okay.
So now as an owner, you can deduct your car expenses. So
and what does it mean to deduct it?
So deducted is being able to lower your taxable liability, right? You also have credits as well. So deductions and credits. So one thing that I recommend to business owners at the start of the year, understand, and it seems very simple, what is your mileage for the year? And why do I say that? Because that's a way for you to keep track and keep organized. What are you spending, or what mileage are you going to for like different business events throughout the year? So keeping a template of like all your different interactions. If you go to a networking event, that's around your business. You go to meet a client, that can be deductions that you have throughout the year.
So here's my question to you, because deducting, same concept as writing off, right? You hear people say like, oh man, I got this. No, it's all good. I'm gonna write it off anyway. What's the myth behind write it off? Because I feel like people think writing off means free money, and that's not the case.
Say that again.
Basically, what is writing off? And I want you to kind of like debunk some myths against writing off. Like you're still paying for that, you're just not paying taxes on that, essentially.
Yeah, correct.
Because you hear that all the time. Like, oh man, don't worry, brother, it's a write-off. Or like, I'm gonna go buy this Escalade because it's big enough to get a write-off for.
Yeah.
And it's like you still bought the car. Like,
correct. So one thing about write-offs, it doesn't really matter if you don't have the income with it. So if you want to go buy a G-Wagon because you can write it off because it's the same, it's the weight size of it, I write that off for my business. But G-Wagon $200,000. So if you're making $50,000, $100,000, it doesn't make sense for you to do that. So you need to be at a certain income level. Yeah. And think about what deductions, if you're thinking about bringing on deductions, does that make sense for my business? Right. So that could be, so that's what they think about write-offs, right? Okay. Yeah.
So you talked about expenses. What else, as an entrepreneur, is a way to increase or decrease your
Yeah, so
because there are, we'll talk about it after, but there are reasons you would want to increase your tax bill.
Yeah, there are reasons. Yeah, we'll have a couple examples on that.
And we'll talk about that in a second.
Mm-hmm. So a couple of the ways to lower your taxable liability. I think you should be looking at if you're looking about investments for your company and how you scale your company. So say, for instance, you have a manufacturing or a CPG company.
Okay.
You can actually buy equipment early on. So buying expenses early on, investments in your company instead of waiting for the year based on your tax rate. You may want to get that a little bit early on for the year.
So buying equipment, because equipment has value. It's now an asset. It's on your balance sheet. So not only did you deduct it when you bought it, but I think you started.
And now you have depreciation on that as well too.
So explain how depreciation of equipment works. What's the concept of that?
Yeah, so I think one deduction, before I answer that question, one deduction around equipment is the 179 deduction.
179.
And you could take full advantage of that whole amount, or you could take a portion of that for say $30,000, and then allocate the rest as an amortization over 180 months for the rest of his life.
Okay.
So if it makes sense for you to take full advantage of it, as if you're making quite a bit of income for the year. But if you're not, take a small portion of that, and now you can amortize that over the life of that equipment.
And then still have the ability to sell equipment and generate revenue off that. Okay, so next question. Now we talked about decreasing our tax bill. How do we increase? Well, not even how, because we know how. But why would a business owner want to increase or show more income and pay a higher tax bill?
Yeah, a couple reasons. One could be that they're looking to get capital, so they're going to a bank. So you want to look better to a bank and more investable to a bank. So they want to see that you're a profitable business, and also that your revenue is increasing.
Because banks don't care about revenue; they care about net income. Correct.
Correct. Net income and also cash flow.
Okay.
Yeah. But revenue is going to be important, right? Because if they see increase, they say, okay, this business is growing. So that's one reason. Then also, two, we think about investors. So say outside of banks, but this maybe personal investors or company investment. That's one thing they're looking at too. Do you have increasing revenue? Do you have consistent growth within your company? So that's another reason why too, if you're thinking about going to the next level in your business, investors, banks, they're going to want to see that generation of revenue, because that can help you with your interest rate. And that can help you with the amount that you get as well.
Okay. I'm going to move over to P&L. We talked about it earlier. I want you to kind of hammer on this because I think it's important. Talk about P&L versus cash flow. And obviously, at the end, I want you to kind of bring in how you help people realize the difference in what you do in your business to wake people up to the difference.
Yeah, when we think about a P&L just gives you an idea of your profitability. So obviously, it's your revenue is in your expenses, right, for the year. And that revenue could be cash that you've gotten in that particular time period. And that's, say, for instance, January. So it tells you what you got in January. But some of that revenue can actually be accounts receivable.
Okay.
So something that you have out to a client. You have an invoice out to a client, but they don't pay you until 60 days. You still may be recognizing that revenue on your P&L, but it's giving you a bit of a false sense of what your ultimate profit is, net income is for that particular month, and what your cash flow is, essentially. How much cash do you have to run your operations?
So money is coming in, but it ain't here yet.
Right. So that's pretty much a P&L. Cash flow, which I think is essential, probably the more essential statement for small businesses, is the ins and outs of your cash flow, no matter what time period, right? So it tells you when you have to pay bills, different vendors, different accounts payable. Also, when you're getting your money in that particular day. So if a lot of your stuff is coming in 30 days, now you can understand, okay, what do I need in terms of working capital to be able to pay my different bills for the month, whether that be headcount, whether that be other expenses that I have on my books.
So as a fractional CFO, is that where you come in and sometimes recommend like a line of credit with a bank if cash flows are unsteady, especially with big sales? And then secondly, would that be kind of your job to tell the CEO, like, look, this is just not going to work this way, or we're fine, or hey, stop spending this much money now because we're not going to have it until then?
Yeah, so you made a good point with the cash flow. It does give you a greater insight in terms of what your liquidity is, your short-term liquidity. How much do you have to really operate your business on a short-term basis? And also, too, it allows you to see, okay, I need to make an investment for my company. to make it scale quicker. So maybe I need to get some equipment.
Mhm.
I need to get this software, but it's $30,000 or $40,000. Do I have in my books where I'm at? P&L won't tell you, but a cash flow will.
Okay.
Yeah.
And you create these cash flow statements for
create
folks,
these
correct?
cash flow like statements and forecasts. So whether those be on a 13-week basis
Mhm.
or they be on a monthly cadence, it all kind of depends on on your business and kind of what you feel is what I think it may be appropriate for your business.
Okay.
Yeah.
Here's more of a thought question. I got
Mhm.
two more for you today. The thought question is, I'm a business owner. I'm in that 0 to 1 phase, right? If
Yeah.
we're talking about 0 to 100, I'm in that 0 to 1 phase
Mhm.
where essentially you're at the point of your career where you're working harder than you are generating income, right? We're building a brand, we're building a product, we're building an assembly line, we're building a team, we're building a mission.
Mhm.
What advice do you have for business owners from your perspective in what you do? What advice do you have for them in that 0 to 1 phase that they need to make sure they're either doing or not skipping out on?
Yeah. Making sure that you have you're setting up the processes,
Mhm.
procedures for your business.
Okay.
That's one thing I see that's continually overlooked by business owners. Very worried about so much getting a sale, but set up your infrastructure,
Right.
right? So set up your workflows. Once a client is on board, what's your onboarding plan for a new client? What process do they go through when they come to you? So you have the meeting with them. What happens after that? So setting up that process is going to be critical because now you can see like gaps in maybe some of your, some of your procedures, right? Something that you can change, right? And then really understanding if you're producing a product in CPG, what are all the steps in that process, right? So where do I get my product from? Who do I have to hire to help me produce that product? And then when I go deliver that product to different clients, what does that process look? What are my logistics? So getting a logistics plan set up, understanding, who are the right vendors. I always have 2 or 3 examples or 2 or 3 potential vendors
Mhm.
for your product because you want to make sure that you get the optimal price and not just using one vendor for everything. Because something shuts down, supply issues with that person, you don't have a backup. So
Mhm.
understanding all your different
Mm.
resources that are available to you is pretty important. You want to set up templates too. So once you start out the year, you want to have different things set up, such as I mentioned before, looking at your mileage, also having your template of all your expenses,
Mhm.
deductions and potential credits for the year.
Mhm.
Look at that on a monthly basis.
And have a task
So
conversation on the front end too, right?
correct. And having that throughout the year, that's where I come in at, where I think is very important. Having those conversations maybe every month, if not, or every quarter, if not every month. Because things may change in your business and you want to maneuver and be nimble in terms of what you're doing with your business, right? If you need to change some things or things are changing, okay, does that impact my tax rate? So now my estimated payments are different now. So those are things kind of to think about, right?
So, and I appreciate you sharing that. Here's my
Mhm.
question to you. Io's Hair Shop, right? At what point, how many wigs I got to sell before it makes sense for me to hire you
Mhm.
versus makes sense for me to do it myself?
Right. So if you're thinking that you're selling a number of wigs right now, right? You think about hiring somebody.
Right.
Is that your question?
Yeah, hiring somebody like you. At what point do I need to consider bringing you in versus I need to bootstrap and do this myself? Because I'm sure, again, zero revenue, probably not the best for someone like you to come in and work with them.
Yeah.
Again, that's another expense that cool, we writing it off, but we ain't making no money.
Right. Yeah. It's a good question. I think it all depends on each person, but I would
Mhm.
say if I had to like give you a type of range,
Mhm.
if you have maybe liquidity or working capital of like 3 to 5K
Right.
on a monthly basis, if you want to do that, that would be something that you would probably need to have.
At some point, okay.
Yeah.
And then up to, at what point is it, we need to, I appreciate your services, but now I need to hire a CFO because I'm a big company now.
Mm-hmm. Yeah. So
Now, obviously, I'm not trying to take you out the market, but again, at what point for a business owner do you think about I need
to hire somebody full
full
time.
time? Yeah.
Yeah. I'll say we should probably start to get in the millions. Yeah. When you get in the millions.
One in the millions or a couple of millions?
I say like what, 1 to 2, probably
1
2
to 2
million.
million. Okay.
Yeah, 1 to 2 million. Yeah.
I want to bring some up from the last question you talked about
Mhm.
before, with you being more organized, scaling for clients or for
Mm-hmm.
people getting started. And my thought was that I'm guessing that makes your job easier. And then on top of that, makes your numbers mean something. When people leave the transactional mindset and they're able to create scale. Now, when you come in and talk about numbers and how expensive it is to gain a new client, so you know how much money to put forth to make as much, does that make everything easier for you? Because I feel like if a business is unorganized and you do your thing and say, all right, these are the ratios and numbers we need to consider, I'm guessing they mean nothing at that point if the business isn't organized and scaled, right?
A little bit, yeah. I would say that it'll be much harder.
Okay.
And I would say, as you keep mentioning scale, I feel if you don't have the processes and procedures, you can't scale.
I believe 100%.
I believe you can still get by without having that, but you'll get to a certain level.
Yeah.
You won't get to where you probably envision to go to. So, say for instance, you're making $100,000, you want to get to $1 million. You gotta develop processes and procedures. And right? I feel because you need to be able to replicate what you're doing. Everything can't just be in your head. As you bring up people on, you have to think about how do I train those folks to be able to do things that I want them to do them. You know, and that takes systems and processes.
And get out of that mom and pop mentality.
Correct. Yeah. And understanding like, okay, maybe I need to bring in the Monday.com software for my business, right? Because I'm having a workflow issue. Yeah. Things keep getting mishandled. So now I'm having Monday.com come in using that software, and now my workflows are automated now. Yeah. So once I'm done with my part, other person gets an email that their part, they're ready for their part, right? So now you have a more structured assembly line versus, this craziness going on. Yeah.
Man, that was first of all, I appreciate you for coming, man. This was, I think, a wealth of knowledge. I even see the people in the back. Everybody's taking notes, man, and I hope everybody at home's taking notes as well. Yeah. Where can we find you? If we want to work with you directly, how do we find you?
Yeah, find me on LinkedIn under Mark Steward. My website is www.thelegacyoptimizer.com, and then my email address is info@thelegacyoptimizer.
Awesome. Yeah. Well, I mean, today, just a quick recap today. We talked about, obviously, your story. We learned about what you do, the difference between a bookkeeper, a CPA, and a CFO. Finally saying that correctly. We talked about LLCs, S-Corps, and sole proprietorships. We talked about at what point do companies or small businesses that are in the growing and growth phase need to start adding certain things. And then we just talked about taxes in general, right? We're trying to keep you folks out of jail. I appreciate you coming through, man. And something tells me you'll be coming through for a couple of episodes to come.
Yeah, I think another unique topic to really talk about is entrepreneurship through acquisition. Yeah, which I think is not a lot of our minority community hasn't not been exposed to. Yeah, which I think is important.
I think he's lobbying for coming in on the second season. Well, I appreciate you, brother. Yeah. You take it easy. Thank you guys for watching this episode of Common Sense. Again, I'm your host, Ioe Doe. If you'd like to get more content from us, please like, subscribe, and follow our page.